back, big announcement out of Victoria this week in regard to first-time homebuyers looking to cough up money for their down payment on a house. Government announcing they will match up to $37,500. Here to break it down for us and talk about a few other things as well, Teague Brinkworth from Mortgage West down on Victoria Street. Welcome back to the show, Teague.
Thanks, Susan.
How are things going?
Excellent.
Good.
Despite the government changes 3 or 4 times this year, everything's fantastic.
You had a busy year trying to break it down, I'm sure, for your clients. I know that federally speaking, there's been a lot of changes to financing. And then this week, provincially, what's supposed to be good news, right? So there's sort of been things that have been sort of implemented to slow down the housing buying boom. And then this is going to, in some people's minds, speed it up, at least for first-time home buyers.
It's weird. It's kind of a war between the national and the provincial. The national came in, said you need 10% down for anything over $500,000 for that amount.
Yeah.
And then the provincial government does this, and now that isn't really the case for any property up to $750,000. So that's changing. We've also had, effective October 17th, the government instituted a stress test. So every client that's looking to purchase a home with less than 20% down has to qualify at the Bank of Canada conventional rate, which is 4.64%. They still get the contract rate of, say, 2.54, 2.69, depending on what term they choose, but it's going to qualify them for 20% less of a mortgage than they would have before.
Sure. Let's take a look at some graphs that you sent along. This is in regard to what the province was announcing this week. Willing to, as long as you qualify, and there are a few qualifiers, as long as you qualify, you can have your down payment match. So these are some scenarios.
Absolutely. Example 1, you've got the home price of $48,000. 5% down is $24,000. The government, through their program, is going to match that. So you only really need to come up with 12.
Right.
How that comes into place, we'll know more further on in the week.
Right.
Also, well, next week. Example 2, we've got a home price of $600,000. Again, the minimum down payment is actually on that one, $35,000. So I was talking about the other rule that says 5% of the first $500,000 and then 10% of the remainder. So that equals out to the 35. Again, because it's under that $37,500 mark, that's split as well. This is all done in the form of a second mortgage registered behind another lender. So for the first 5 years, you are not paying interest. In the 6th year, interest begins to accrue at the predetermined amount that was done when you set up.
Okay. And then the last one, sorry, we didn't see that last graph. If we could get into that there quickly. Home price, $750,000.
Yes. So again, because your max is $37,500 from the government, you've got your down payment required of $50,000. Your down payment should be $52,500. I think there's an error in that one. But they will max the $37,500. So as long as it matches, if you're over the $37,500 that you're putting in, that's where they stop.
Do you think this is a good thing overall?
I think overall it's going to open up opportunities for people to get into their first home, and I think the rules are set to create home ownership for people who are not highly leveraging themselves, but this is going to be a good program for first-time home buyers. What
details are yet to be ironed out that may sort of be the devil in the details?
Well, this is set up as a first mortgage, second mortgage situation, so not a lot of lenders want to have any mortgages in behind theirs. The general rule is you can mortgage in second priority up to 90% of the value of the home. Well, the government's going past that. Also, the other rules that pertain it's called the flex down program. So if somebody borrows their down payment, which they can borrow the full 5%. That's called the flex down. If you're borrowing any money, it's a flex down. There's 4 or 5 lenders that allow that. It may force the major banks to run this program as well and actually open up opportunities not just with 4 lenders that do the flex down, but the standard banks as well.
Okay. A second graph as well that we had for this segment, I don't know if we have it here, it sort of goes through the eligibility checklist, and there is sort of a rate or sort of a series of things you have to do to go through to make sure you're going to qualify.
There is. Basically, you get pre-approved, so come into Mortgage West, we'll get you pre-approved. You take that pre-approval certificate to your to the government, you apply, you receive your confirmation of eligibility. There is a little bit more in that process, but they say find your home, take your home loan commitment to your financial institution, and then we'll get you approved. By the time you do this, the start date is January 16th. By the time you have that, we'll have all the process ironed out, the very basic details, and then we'll help you complete it.
And I wonder how long this won't be forever. How long do you think it'll go on for?
They've committed to the first 3 years.
Okay, we'll see how that goes. Yeah. All right, Teague, thank you very much for being here today.
Thanks so much.
A lot of questions in there that perhaps you don't have all the answers for. If you're looking for them, you can absolutely find out more from Teague. Brinkworth.ca is a good place to start there. Mortgage West down on Victoria Street. We are back after a quick break. Stay with us.